All right, good evening, everybody. Welcome back to the channel. Second live show for today, but this one actually I'm really excited for. I kind of signposted this in the community section maybe a couple of weeks ago now, and this conversation I'm actually quite surprised that they actually agreed to actually come on and have this conversation with me, and I think it's going to be really informative. So this evening I have got FreeTrade on the show with us. We're going to be diving into their recent retail investor survey. It is very interesting. What I'll do is I'll grab a link and I will pin it to the comment section, to the chat section, so you can go and have a little read of it. And I'm also going to ping a link to their newsletter as well. Dan will talk a little bit about the newsletter shortly. But as always, we're going to talk about the investing world and what retail investors are up to, how they're finding it as a provider. I welcome any questions that you might have as well. So as you normally do when I do live sessions, use the chat and the comment section to be able to leave yours there, and we'll feed them in through the conversation. As always, if you are new to the channel, welcome. If you are one of the many people who are always regularly with me on a live session, thank you for turning up. I hope you find value in this conversation. I'm really excited about it. I'm going to bring in Dan in a moment. He's going to introduce himself, and we can get this ball rolling. Cool. All right, so let's get going. Let me bring Dan in right now. Welcome. Good evening.
Hey, evening, Thanks very much for having me.
No, not a problem at all. Listen, first and foremost, thank you for agreeing to actually come on the show, because I think I accessed the retail investor survey probably about a month and a bit ago, and I was reading it. I was like, oh, it would be really good to get commentary from you guys, and I just thought, you know what, I'm going to chance it, and I'm just going to email you just to see if I get a response. And lo and behold, I did, and here we are. So I really do appreciate you spending the time, especially on a Wednesday evening, this late as well. To kick us off, why don't you give an introduction to yourself, what you do at FreeTrade, so on and so forth, and that will get us going.
Yeah, absolutely. I mean, listen, on the retail survey, it's important that we talk about money, right? So I'm more than happy to be here, and thanks for having me. So I'm Dan Lane. I'm senior analyst and part of the editorial team here at FreeTrade. So our purpose is to get everyone investing and get everyone investing well and sensibly and in a way that suits them. So the way that we do that is we have a daily newsletter that you've just alluded to there called Honey, bees and honey, that kind of, I'm not a Cockney guy myself, but I understand that is a phrase. And so that's released every day, and it's kind of like a complete jargon-free way to talk about the markets, talk about personal finance issues, talk about kind of investing guidance in a way that you could probably do on your commute. We also have articles on our site and offer loads of education. Feel that's super important in everyone's investing journey. So that's our side of FreeTrade. And for anyone who doesn't know, we're a non-commission broker. Just celebrated our millionth customer there on the app, so we're very excited about having 1 million Britons in UK taking control of their financial future. So definitely check it out as well.
Yeah. So I know that many of you who watch and follow me on this channel will be using FreeTrade. I think when we talk about commission-free investing, I think you are probably one of the bigger names that are out there, alongside maybe Trading 212 and maybe eToro as well. But I think one thing that I've always heard that you do really well, and I've experienced a little bit, is the support that you have within the app as well. You're very quick at getting back to people, and that's, I guess, that is definitely one thing that you have over and above maybe the competition, because sometimes when you're going to ask a question, it can be very difficult sometimes.
Yeah, I mean, listen, we're running our own race here. We're doing our own thing. We have a very clear narrative of where we want to get to, and we want to be on the side of the retail investor, whether that's in the boardrooms eventually, or whether that's answering your questions when you don't know where your ISA transfer has gone. It works both ways on all levels. So yeah, and then obviously the editorial support that we provide, we think it's super important. We can't just leave people once they download the app. That's not fair.
Yeah, cool, perfect. So I want to talk a little bit about the retail investor survey, because when I read it, I thought it was really interesting in terms of some of the insights that came out at the back of that. Before we actually get into maybe some of the main details that I think are important, were there any key observations from you reading and getting the information back when you were collating it that you thought, as a business, that's actually really interesting?
Yeah, and I mean, listen, it's we ran it earlier this year. It's no real coincidence that we did it this year because after the whole January, February madness in the market, we saw some pretty big statements from some big players saying about basically tarring retail investors with a certain brush and
Hmm.
saying that there were some behaviors that young retail didn't know what they were doing, and it was all very kind of eyebrow raising, and people were fanar, look at these young retail investors. And we thought, well, we want to say that's unfair, and we kind of know that anecdotally, but let's put some figures to that. And actually, in the survey, that's the biggest findings for us were along that narrative. So, we even went down to saying to people, because we had a big spike whenever the whole GameStop debacle earlier in the year. We had a
Hmm.
spike in customers, but we left it a little while, and we spoke to people once they'd been on the app for a while, and we said, do you feel impulsive? Is it a thing? Are you an impulsive trader? Where do you put yourself on the spectrum? We only had 14.5% of people say that they were impulsive. Now, it's a survey; people can say whatever they want, but
Hmm.
sample size of over 2,000, we had 14% say that. I think it's easy to jump on a narrative and connect the dots where they're not there, essentially. And I think that was an easy headline for a lot of papers, especially. But then we had 45% of people say that they really had started to concentrate on their personal financial situations and taking control, especially
Mm.
over lockdown. It was a chance for people to reflect, and that this came on at the right time. That free trade was there to serve people. It was what we asked people, were you just bored during lockdown? Like, you can be honest with us. And they
Hmm.
said, no, no, no. There was nothing about, I saw loads of ads online. There's nothing about, oh, just bored. It was, there were reasoned responses like, look, the lockdown has showed me how important money is to me. Some people were like, look, I kind of took a dip. I was on furlough. I'm back now. It showed me to take control. And, that was the biggest thing we found. People were actually being responsible and careful with them, where the narrative was saying that they were just being a little bit silly.
Yeah, it's interesting you say that actually, because I think my channel grew massively through the pandemic, and it was through really investing content. Um, and I think you're right. There was a segment, and I was reading it. All this in the tabloids, retail investors don't know what they're doing. They're gambling, that kind of thing, that kind of stuff. And I always found that to be quite an interesting kind of like narrative because you know considering where we were with the pandemic, like, can you blame people for seeing something in the news, thinking, "Oh my god, that people are making money here"? It is a natural human kind of like reaction to be inquisitive and go towards that thing. Then obviously, yeah, there are risks, and which is where some of the work that I do here is really, really important and stuff like that. But one of the key things that you found, and this is an interesting one because part of what I do, I obviously I talk to a lot of creators. I do one-on-one coaching, and surprisingly, although the audience here on YouTube is overwhelmingly male, um, the majority of my coaching clients are female. And in your retail the retail investor survey, I think it was something like, I can't remember what the number was, that just over 23% of new investors were female compared to 76% being male. Do you think do you know is do you think there is a massive reason for that big difference in that demographic shift between males doing more investing, and what can be done in terms of trying to get maybe a few more females actually investing in the stock market?
Yeah, no, listen, it's a super important question. And before we start, I'm very aware that there's two men sitting talking about it, so I don't want to be.
Yeah.
I'm going to approach it carefully because hey, no one wants to be mansplained here. But
Hmm.
the okay, so I mean, I've been in the industry for a while now, and I've worked for kind of large asset managers, some that you've probably worked with in a past life, and the same old narrative comes out. Women don't take risk. Men trade too much. Women hold for the long term. Women like cash more than investing. These are things that people have said for 15, 20 years, but no one's ever put any, no one's ever put any figures behind truly in a
Hmm.
real. What I would say is that there are differences in, and I'm not going to say about in mentality or anything because I just don't think that that's relevant or appropriate or even correct. I would say that there are challenges that women would tend to think about more than men in terms of things like how do I keep my investments going if I were to take maternity leave?
Hmm.
a lot of companies are being very good, but we're still not there in joint leave for mums and dads. And they might think, okay, well, what are my pension savings going to do? Are they going to take a dip during that? Is that going to affect my risk appetite now? Because do I need to be a little bit more conservative in the time that I'm not saving? Or there's lots of things here, and there's also the glaring issue of kind of gender pay inequality, in whatever way we treat that, in that there's lower abilities for certain cohorts to save, and we see that, and we want to be part of that, and this is part of the things that we study in Honey and our Invest Hub. To fully educate everyone. Our purpose is to get everyone investing, and we truly mean everyone. And that means ease of access, functionality, getting rid of high fees and clunky platforms, which were a barrier for everybody until we genuinely believe until we started offering something different. But to put it into perspective, we ran a similar survey in 2019 in which 10% of respondents were women investors.
Wow. Okay.
It's up to 23 now. Listen, we've got a lot of work to do, but it's nice to see that. And another part of that figure that we probably should draw attention to is that 55% of the 23% that we talked about were first-time investing millennials. And it's no real shock to me that this group, and 55% is quite a nice figure. You're talking about half there of these millennials who are saying, I need to take control. No one taught me about it in school. The national curriculum was terrible. They taught me about water meters and gas readings and stuff. No one taught me about, I know loads about triangles, but I don't know how to invest. And it's surprised to me that saw a big spike. So we're using that as a jumping off point, not as a pat ourselves on the back for rising, 13%, but we need to double that again so we get 50-50.
Yeah. And it's funny that you talk about the pool of new retail investors, because I think in the actual survey, I think that the number was versus experienced investors, new versus experienced investors was like 58% new investors, 41% experienced investors. I can certainly say that a lot of the people that I have conversations with are relatively new people. And for me, it's really, really exciting to see and have those conversations with people who are approaching the markets for the first time with enthusiasm and with excitement and with that willingness to learn about what's actually going on. How does this actually work? And I think the work that you do in that space is really, really important. Why do you think there has been that massive pull for first-time investors into the markets now?
I think a casual observation of the industry this year and last year would be that either GameStop and lockdown conspired to bring people in to kind of dabble in the markets. But I've been a personal finance writer for a while, and I would say that a bit like the tech recovery last year, whenever all the tech stocks shot up, it wasn't just because those companies came out of nowhere. This narrative have been bubbling in the background. It was just a trigger last year. And it's the same with retail investors and moving from cash savings, taking that extra step into risk assets and getting into investing. That narrative has been in the pipeline for them that past number of years. I mean, if we look at, the average house in London costs 14 times the average salary in the country. There's record low interest on cash savings. No one's getting anything from that. Bonds are useless. These gold-plated pensions that our parents and grandparents had have disappeared into thin air. And there's this real rise of entrepreneurial, who said that right, spirit in the UK where people are thinking, now's the time. I got to do it. I'm either going to start a side hustle, I'm going to start investing, I'm going to learn. And that coupled with platforms that make it a little bit easier, provide a little bit more guidance, and just make it a simple onboarding journey and support you. It's no surprise to me that it happened last year, but last year was a trigger. It wasn't the whole story.
Yeah, I think it's really, really interesting because the main things that you've highlighted there, very, very, very little wage growth, if any at all. And we're looking at high inflation right now, low interest rates, house prices constantly increasing. Those things are real challenges. And I think, when you think about money and the role of money, well, when you are faced with that kind of situation, there is no other option but to look towards the markets and start to think about, okay, how do I look at it and approach it from a pragmatic point of view to make it work for me? Because frankly, the alternatives are pretty much non-existent, and that isn't sustainable moving forward. I mean, there's talk about, maybe on November the 4th, interest rates increasing, but it's not like we're going to see the interest rates go from, 0.1% to 5% overnight to give savers that boost in their bank account interest that they can get on their bank balances. That's not going to happen. So I think it's almost like a perfect storm almost, which then means that you have more money being injected into the stock market, increase in asset prices and so on and so forth. Have you seen like a transition between where perhaps new investors land in terms of what they originally use you for versus do they transfer or move into using you for other things like ETFs or anything like that?
Yeah, I mean, listen, we can track the glory of being a young company is that we have data in a really nice, presentable way of basically everything internally, so we can track everything. And something I use that for is every month I write about what have been the top buys on the platform over the last month. So actually, Monday's issue being the 1st of November. I think it is the first. Yeah, it is the 1st of
Yeah,
November.
1st of November.
Um,
Yeah.
yeah, so in Honey, I'll write about what were the biggest buys in October over the month. And one thing that we see there is that, there's popular stocks that go up and that appear and then disappear from month to month. Something that always appears, and you can go back and read the months if anyone's interested, or just wants to keep me right, are the broad-based ETFs, S&P 500s, your FTSE
Okay.
All Shares, your FTSE All Worlds. Those are the ever-presents. They are the first on the team sheet, and we see our cohorts, whatever brought them to the platform, whether they were at an incumbent platform, wanted lower fees and came to us, or whether they started investing through GameStop, we tend to see this maturity towards this core and satellite model of core ETFs supported by, maybe a few choice holdings on the outside. Those could be stocks that they know and love and they use every day, but a lot of our customers warm to the idea of that core holding being a dependable market ETF. Yeah.
That's music to my ears because I've done a number of videos where I'm like my approach, and I obviously people shouldn't copy what I do. Absolutely not. It's all about research. But I use a core satellite approach. I've got a core of ETFs, index funds that sit in the middle. Then I take an interest in individual stocks around the corner. Do you think there's a particular reason why people first start with those stocks and then migrate into some of the core ETFs and funds? Do you have a lean or a steer on how they come to that conclusion in their journey and what leads them there?
Well, yeah, I mean, it comes with the education. It comes directly alongside the education because an ETF can be faceless and nameless, and there's no narrative.
Hmm.
There's nothing to connect you to it. Some assets that I've bought, I can go and buy their goods, and I have bought their goods, and I can look at people buying everything, and I can experience the product, and people will experience it, and this is why people like property investing, because you can see it and touch it.
Yeah, that's right.
The closest version in investing is something that you can use, and you could, the amount of times people have bought me a Guinness in the pub and said, "Oh, supporting Diageo," something like that,
Yeah.
But once you get past that and you realize that actually when we start talking about diversification and someone says, there's baskets of stocks that are already diversified for you, it blows people's minds.
Hmm.
And they either go two routes, they go down investment trusts or the ETFs. But sooner or later, they look at the fees and they think, my words, and a lot of them stay with ETFs for the fees argument,
Yeah.
especially with free trade, because, a funny little quirk is that it's cheaper to hold a lot of the Vanguard ETFs on our platform, not Vanguard, because we don't
Hmm.
charge that platform fee. So
Yeah.
that's where, whenever people get really into the fees, which they should, and really into diversification, that points towards one asset class, really.
Okay. It's interesting you've mentioned fees there because there is a question on here around kind of like fees, and I think it's at the top of the chat. I noticed it at the beginning. So I'm going to ask you this right now. And I think the answer to this is relatively simple. But I think the question was something along the lines of, if it is commission free, how do you guys actually make money? And I think the answer to that is obviously with ISAs, you've got subscription fees and you've got a premium package and that kind of stuff. But just talk people through just the general fee structure with FreeTrade.
Yeah, absolutely. It's a really good question. It's something I asked in my interview as I was joining. Um, yeah, it can feel opaque, but it really isn't. And we say this all over our website. So it's £3 a month for an ISA. That's a flat fee. So other platforms, if your assets grow, your percentage fee grows, and we don't do that.
Hmm.
It's £3 a month. 9.99 to hold your self-invested personal pension, your SIP, with us. We have a premium version with access to kind of all sorts of strange and wonderful shares outside the norm, maybe into your kind of like small aims past the AIM 100 or beyond that, and that's a 9.99 per month. And if you hold that, you get a discount on your SIP, and you're saving money.
Yeah, yeah.
But yeah, and on foreign shares, you'll pay a 0.45 FX fee on US shares,
Cool.
and that's how we make money. Yeah.
Yeah. So it's pretty straightforward in terms of the actual fees. And I think there is, I say this all the time on the channel because I don't necessarily think that free is always the best option to go for. I always say to people that, you've got to weigh up, okay, cost is only an issue in the absence of value. So based on how you want to invest and based on your circumstances at any given time, is it worthwhile paying for X in exchange for Y? And I think you have to come to that determination on your own. Because I think one of the examples that I do give, and this is something that is that was highlighted during the GameStop and AMC saga, was the likes of Robinhood, for example, they would sell the order flow books to the hedge funds, and then you then get into the conversation of, well, there's a direct supposed conflict of interest if people are using your platform to squeeze the hedge funds, but you're selling data to the hedge funds. So you then get into that kind of situation. And I think ultimately you have to pick your providers according to what your needs and requirements are, more importantly. And people talk about fees all the time, but I always say it's not always the most important thing when you're looking at your provider selection. The service and what they're going to do for you and how they get you towards your goal, I believe is a better way to look at the best vehicle to potentially get you there. Do you want to be in a Jeep in the middle of a sand dune, or do you want to be on a Caterham? Which one do you want? It's all about capabilities and the job at hand, essentially.
Yeah, and listen, to put people's minds at ease, that payment for order flow is completely illegal on this side of the pond. So we would never do it. It's not on the side of the retail investor, so we would never do it anyway. But yeah, I mean, listen, even on fees as well. I mean, my background is active asset management, open-ended funds and investment trusts, and there was a war. I mean, you'll probably remember this. There was a war around 2015 where the passive world really kicked off and everyone was flooding out of active instruments into passives.
Yeah.
And there were a few notable UK big names, your likes of Terry Smith, Nick Train, who continued to outperform the market net of fees. And even if you'd added their fees onto an ETF, they would have outperformed it there. So I'm not going to make the case specifically for active fund managers, but I'm going to make the case for good active fund managers who can consistently have a process that you understand and they put in place. I think holding something over the long term means buying into a process, and whether that's your own process or somebody else's that you can pay a little bit up for, I think that's fine.
Absolutely. I definitely agree with that. I mean, I've worked with discretionary fund managers with an active approach. And I know that sometimes, you have very, very good active managers out there who do very, very well for their clients because they have a very specific philosophy and strategy that they pursue. And if that works for you, that absolutely works for you. I mean, I've got somebody with an active manager done really, really, really well this year, 25, 26% so far this year. So you start looking at in comparison to some other things in relation, you start to, get a picture of, okay, does this work for me or not? But I think a lot of what you kind of spoke about there is the continuation of education and the importance of really getting your knowledge base up so that you can kind of understand how passive investment works, how active works, the pros and cons between each, how you decipher which one is best for you and your approach. And I guess this is my next question. How important do you think education is in a day and age where social media and meme stocks are all the rage. I mean, you just need to look at TikTok and some of the stuff that goes on there. I despair sometimes. How important is education for you guys?
I mean, it's everything. It's completely everything. It's the thing that will keep you around. It's the thing that if you don't have it, will scare you off and you'll never invest again. It is everything, and especially for me, it's. I've based my career on it, and not I didn't fall into it. This is my passion, and I absolutely adore investing. I love it, but I've had shaky moments,
Mhm.
and as a professional in the industry to have shaky moments, I can only think what people who have jobs outside this crazy world and who can only check in after a long shift and see a stock's down. I can only imagine what that does to your emotions. Um, the only thing you can do is set yourself up before anything else happens.
Mm.
And you know, as you've said about TikTok, I don't have a problem with TikTok per se because people are gonna want to learn, right? And we either give them the tools or they find it somewhere else. And unfortunately, our industry, on the whole, has just been far too slow to engage people in the way they want. So
I'll agree with that.
I'm not surprised people are going to go on TikTok, listen to someone pointing at assets for 3 seconds and saying, buy these, and they're doing it. I'm not surprised at that, but I think a little bit of introspection in our industry, and we have to hold our hands up and say we weren't there. Now, I'm going to differentiate myself from the industry because I joined FreeTrade and we set up Honey as an antidote to all this, so that you can read it in a way that suits you, and feel like you're learning without feeling like you're reading a textbook.
Mhm.
Um, and you've done your exams. I know I've done my exams. I'd never want to look at that type of material again.
No,
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 and I was getting
definitely
paid to
not.
do it.
I'll tell you what. I've had the IMC on my list of exams to do for like maybe 2 years now, and I
Yeah.
cannot. I said it on Sunday because I had a rallycon, and he's just finished the IMC, and I was like, I cannot bring myself round to doing it. Just the thought of just going through the textbook with all of the language and the theory and all of that kind of stuff. I'm like, do I really need it? Do I really need it? Yeah.
Yeah, absolutely, and there's a few of us on the writing team who have it, and our newest writer is studying for it, and I'm just glad to be out the other end because I don't know if I could do it again. But listen, it gives you this perspective because on your commute home, do you want to read something that maybe has a few memes and a few laughs, and when someone says when you get home, a housemate or a partner says, "Oh, did you see what happened today with the budget?" You can have a few sentences to take part in that, and
Yeah.
you understand rather than
Yeah.
say,
Yeah.
"Listen, get me a beer. I don't understand."
Yeah.
And that's where we position ourselves. And if you can read it for 5 minutes every day, or a few days, or a weekend read, or pop onto the site and have a little check, we think that we're engaging you in a way that you're not scared, you're not put off, you're not rolling your eyes, and you are going to become a better investor. And that's all we want. Like, genuinely, it seems overly altruistic, but that's all I want is because you educate people now. When volatility strikes, you don't have to teach them anything. Then no one's
Mhm.
coming to your door and saying, "What do I do?" Because we've talked to you about it for the past
Yeah.
6 months.
Yeah. I think that's the really important bit, and I think sometimes look. I think you mentioned this a second ago, and I'll circle back to that because I would love to know your take on this. But the hardest time for anybody investing, whether you're new, whether you're experienced, whether you've been doing it for years, is when you look at a stock and you've got money in it and it's down 10, 20%, even 5%. That is the hardest thing to deal with. And I think you kind of mentioned that you've had difficult times. And I was going to circle back and just ask, how do you deal with it personally when you look at a portfolio and it's down like 10%? What goes through your mind and how do you kind of check yourself to get yourself into a right rational thought, let's assess this properly type of mode?
Yeah, it's I think you get there by doing it all before that even happens. So you set yourself up. One thing that I've worked with some amazing professionals, one of whom told me to always conduct a pre-mortem. When you
Mm,
buy a stock, okay, let's just pretend that it's gone down 30% yesterday. What is the biggest thing that's likely to hit that stock that you think would have caused that 30%? Can you deal with that? Um, what would you do? Let's just conduct it right now. What would you do? Do you believe in this long term? Is it a systemic issue? Is the sector due a correction? All these types of things you set yourself up for, so that if it does happen, you've already kind of predicted it in your head. Um, and another way, and this was so I'll tell you a story. So in March 2020, I was in the office of a fund manager filming something, and he just turned around and said, and this was the day the FTSE dropped 10%. He just
Mhm.
turned around and said, "I've just lost $100 million." And he just said it off the cuff, and I was like, "Do you want to run back to your Bloomberg terminal?" And he's like, "No, no. Everyone knows what they're doing. Everyone knows what to do in this case. There is money being deployed as we speak." And he didn't
Mm.
even need to leave the room. He was getting his makeup done, and he didn't even need to leave the chair. And I just thought, well, if you can do that and lose 100 million, I can lose 50 quid and get on with my day and then reassess.
Yeah.
Yeah,
I think that's really, really important and really a really powerful point, because there is no better thing than being prepared. And like 100 million quid is a lot of money. For many people, will
oh
be
yeah,
like, "What? The world's ended. Like someone's going to get fired. The world is burning. Like close the office." But actually, there's been preparation for it. There's probably other things that they've got, like contingencies. If this happens, this is what we're going to do. And I kind of do say to people that, try and think like that in terms of, right, if it goes down to 20%, does it really impact you from a material point of view day to day? And prepare yourself so that it doesn't. So having an emergency fund, all those kind of things, having a little bit of risk tolerance in there, prepare yourself for it. But I think that's a really important point and an important story to leave people with, because yeah, I mean, psychologically, it's not nice when you're seeing your portfolio down, and all of a sudden it's money that you've lost. And I always say to people, it's only a loss on paper, not real yet. When you cash it in, then it becomes very, very real. Like
mhm,
whilst on the red in a screen, don't worry about it. It's cool. Just let it be for the time being. But
yeah,
human emotion often takes over in a lot of cases.
absolutely. And do you know if it's there's, I mean, there is a case for saying that if there's something structurally happened to a company, because this is what people forget as well, is that you're not buying a signal on a screen, you're buying a share in a business.
Hmm.
And whatever's happening on that screen, it could just be that some shareholder has just decided, that they want something else and they sell out. Um, but what's happening at the company? What's happening? Is there something really, really wrong that's happened that you don't agree with? Have they sold off a part of the company that you thought was the most profitable? Well, maybe it is a chance for you to actually get out of that. Then it's we should look at the companies first and the share prices second. And it's very, very difficult to do that a lot of the time. But
Yeah.
it's something that I learned through years of doing the wrong thing.
Yeah.
You eventually do the right thing.
Yeah. I think the case in point right now is Tesla. I mean, I did live this afternoon just talking a little bit about Tesla, because with it crossing the $1 trillion valuation and the share price being at 1,050, I've had a ton of messages. How do I buy Tesla? And I'm like, pause just for a second. Let's have a look at the business. And the
Yeah.
Q3 numbers were really, really interesting in terms of the delivery numbers. And despite the chip shortage, how well they've been able to do. And it's amazing, really. And this is why I talk to people about the management behind the team, the management team. What Elon is just an absolute genius when it just comes to thinking outside of the box. And it's amazing when you read that he's aware that there's a chip shortage. So what he does is he gets the software guys to rewrite the software, the firmware, to bypass some of that stuff so that you can carry on as usual. And it's like, even when you talk about supply chains, I've watched him speak at a conference a couple of weeks ago, and he was saying, look, if we go to the market and we know we need something done or we need something produced, and we think that the supply chain is way too long and it's going to impact us significantly, we'll talk about bringing it in house and just do it in house and do it ourselves. And those kind of fundamentals are so important when you're looking at buying a business, because that's what gives you the confidence in knowing that actually, if the company's in trouble, that person right there can think outside the box and has a track record to really pull it out the bag. And those fundamental research pieces being key to education, I think, are just priceless, particularly when you look at companies like Tesla, where the share price can be so volatile on a day-to-day basis.
Yeah, and there's exactly that, and there's pros and cons of having such an enigmatic leader that build
Yeah,
a
going on
culture.
Joe Rogan, having a bit of a smoke and then tanking the share price. Yeah,
Yeah,
tweeting.
I tuned into one of the analyst calls where he called one of the analysts a bonehead. I've never heard that on a call. Um, but there is a case for knowing the management in a company that you're invested in. is nimble and will take sensible risk? Or are they fuddy-duddies who are collecting their paycheck and going to the Ivy for lunch? And there is a real skill in and getting to know who that management is, because you can talk about PEs and price to book and everything you want. When it comes to it, and there is something that's going down like this current situation, can the management pivot? And if the answer is no, well, I don't know. These big firms, elephants don't gallop and all this, but they sure can do something else if pushed. Yeah, it's super interesting.
I'm interested to know, because you obviously do the newsletter and stuff. What are the consistent most bought in the newsletter that you've found? What are the most bought kind of assets or instruments?
If I think about the last 6 months, it genuinely does change monthly. You've got big tech in there. There is big tech. I'm thinking about sectors. There was a while there where a green energy ETF was a consistent, that was an ever present for a couple of months. Electric vehicles, they tend to pop up quite a bit. Tesla is the most popular there, as opposed to kind of the Chinese ones, Xpeng and
Neo.
Neo, yeah, and I think there's a Li Auto as well.
Yeah.
What else is there? There tend to be the ones that kind of, if there's a big IPO or if there's a big SPAC, they will be popular for that month because of the excitement. And
Is that to assume that DWAC is going to be in there this month?
I mean, I'm going to have to look at the numbers, but I don't know how. Listen, you're going to get a good GIF in that article if there's a that's up there. Yeah, that's kind of fallen away a little bit, but there is something about that price rise and thinking, I know why I didn't get into it, but whoa, that's painful to not see that kind of rise. It comes back to it eventually, but that's the curse of the backward-looking investor, isn't it?
Yeah, indeed. Someone in my Discord group messaged me and was like, "Have you seen this?" And I looked at it and I can't remember. It was up something like 100. It was the first day. I think it might have been 170 something % up. I was like, "No, I need to have a look at it." And someone said Donald Trump, and I was like, "Okay, I definitely need to have a look at this." Then had a look at it and thought, it surely can't go up for like 2-3 days in a row. So the second day it did the same, and I think it started trailing off from the third day or so. But I read something, I think it was the day before yesterday. I think the valuation is now at $1.7 billion or something like that. And it's interesting when you look at that kind of stock because of Donald Trump being behind it. There's a lot of political angst behind it as well. It's not necessarily about the fundamentals of the business or what he's trying to do. It's not really a business right now. So it's always interesting watching and seeing how markets can be moved by human sentiment and the way people feel about the world and what they're faced with on a day-to-day basis. It's a really, really powerful catalyst. And I think AMC, GME, and maybe this are prime examples of that human emotion and human sentiment moving stock prices to out of these world numbers, really.
Yeah, and it's something that it really highlights for me, and the whole SPAC craze is that, again, going back to the active management and specifically investment trusts. I'm a big fan of investment trusts. I think there's a lot of pluses to them, but I have friends especially who will say, no, I can't pay for a trust. It's 1%, and that manager is just getting rich off me. But they will buy a SPAC with no assets and no idea of what company it will acquire. There's a big cash shell doing nothing, and there's all sorts of intricacies about floating at $10 and reaping what the banks were, and but they will be unwilling to park their money with a professional fund manager who has access to company management and can phone up Tim if they want to. It's a bizarre disconnect and again, it comes back to the education. Investment trusts have been terrible at marketing themselves because they've only ever been marketed to high net worth individuals. And
that's very true.
I don't think we can blame the retail market for not knowing about them, for not liking them, and for looking at a board that doesn't represent them. So I see why people go. I see why people go down the SPAC route. It's just a little bit too opaque sometimes, and this is a good example of that, where the value can be created and destroyed in 3 days.
Yeah, I think that's a really good point, especially on the bit where looking at a group of people behind an investment trust that don't necessarily represent the people. Because some of the if you watch anything about a SPAC, one of the big people that you'll see online is Chamath, right?
Yeah,
And
yeah,
he's very, very charismatic. He is a billionaire, but he's just a normal guy. He's very, very, very relatable. So if you're researching a SPAC and you see him speak, you're like, actually, I understand what he's saying. And he's very kind of like forward thinking, and the way he explains things, you can kind of make that connection with him and relate to him. And no wonder people are kind of like, yeah, actually, if he said it's good, then it's good for me as well.
yeah,
But yeah, I think education, investment trust. Obviously, you talk about fees there. It's going to cost you a little bit extra. There's that conversation there as well. But I always say that whenever you look at any investment vehicle, you have to, at the core and at the very, very beginning, try to associate to answering one question: does it help me get closer to my goal? Is it a vehicle that can actually help me get there? There are many
yeah.
vehicles that will help you get there, but what's going to get you there in the best way possible, in the most efficient way possible? Sometimes that means, okay, I'm okay to pay a little bit more in terms of fees. Sometimes it means you've got to go with the cheapest thing that you can basically find in the market. It really depends on personal kind of like circumstances. And that's where, again, the education bit is so, so important, because it's personal finance. It needs to be personal, and it should be personal.
Yeah, I completely agree, especially on that point about your personal circumstances. There's a lot of people who will. I think one of the things we found in the survey was that people will go to friends and family for guidance. That's amazing, but their goals could be completely different to yours. Their
Mm,
risk tolerances and the time that they have before they need something, need a bucket of money, is completely different. So actually, the asset's just completely useless to you. Um, and I think the more that you get that, the more that you work those three elements, the closer you are to getting your asset mix. And I think the likes of where the likes of some assets like trusts, open-ended funds can do this, but trusts are just as useful, is in that ready-made multi-asset mix.
hmm
Um, it's it's not all about the upside, and this generation. I mean, okay, last year was a big drop, but this generation has never seen a sustained bear market,
hmm
and we've never had to think about the downside risk. So everyone's probably equity heavy, probably US equity heavy. And if something happens to that, um, are you set up so that your downside is protected? And that's what a lot of multi-asset portfolios do as well. And this is
Yeah.
where the education piece comes in. This is what we're saying in Honey and in the Invest Hub. We're teaching people about prepping for volatility, prepping for rising rates. Do you have some alternative assets in there? Where's your income coming from? Will that be cut off if the sector goes into turmoil? Do it
Mm,
now and get yourself ready before anything
yeah.
like that happens. Yeah.
Yeah. I think fantastic point, because one of the things that is constantly out there at the moment, and as you'll probably know, there is this talk of the greatest market crash happening, sort of this by the end of this year. There are some videos talking about it's going to happen next week, and I think we've been saying this. We've been signposting a significant market correction or crash for a very, very long time now. I mean, look, the last significant one was what, 2007, 2008. So you can argue
Mhm.
that it's way overdue if you look at it from a cyclical basis historically. But I think that in that conversation as well, preparing yourself and being aware that this might actually happen, but knowing that asset prices are so high, do you think that asset prices being high should be a deterrent? Because I often get the question, well, should I buy now or should I wait? And I'm like, well, the best time to invest is now, and
Mm.
now is a movable thing. Now could be today, it could be tomorrow, it could be next week, it could be next month. It really depends on who you are. Do you think asset prices being high should be a deterrent for people?
I think um, I think overly high and suspicious valuations should be there, and as they always should be
Hmm.
as much of an attraction as a deterrent. Um, it brings me back to post crisis when uh, rates dropped and bonds became pretty useless, and everyone flocked to these bond proxies and these big multinationals like Unilever and Diageo with decent
Hmm.
dividends, and they were trading at around 30 times earnings, and people in the market were saying this is madness, and they were telling some of these big growth quality managers, you're absolutely crazy to be buying these things. They're at 30 times earnings. They're not going to survive. Lo and behold, those very expensive shares in air quotes just kept on getting more expensive, and those became some of the best performing assets over the next 10 years. Take the tech sector, take some of these other sectors. Biotech had their time in the sun as well. But what you find is consistency in the models that can thrive through inflationary periods, through non-inflationary periods, who have their own destiny in their own hands, who you could turn the market off for 10 years and turn it back on, and they'd be just as profitable, if not more so. And they'd be saying, what were you worried about?
Yeah.
High asset prices, all they do is give us a relative view of what people are buying in the world and where that money is. It does get to a point, and this is what I'm saying about, we climbed this wall of worry since the crisis, and assets got inflated through monetary policy and the rest of it. But where we've got to is that there is money sitting in overvalued assets around the world that at the first sign of struggle, that money will fly just from those, whether it's institutional, whether it's retail, it will completely go, and people will say, thank you very much, I'll see you. And that's whenever we'll see those assets deflate. We do an onboarding at FreeTrade, and one of the pictures I like to show people is there's a community in, I think it's in Indonesia, that has their house built on stilts, and there are some houses on bigger stilts. And I say, look, the house is the price, the stilts are the earnings. Either the house has to come down or those stilts better get stronger. And that's just what we have to teach people, and then they can make their own mind.
Do you think, because you mentioned there that, sign of trouble, money can move out of the markets, and it will move. Do you think there's a risk of that happening potentially with, because, QE in the States, I mean, I can't remember how much the Fed is pumping in. I think it's 120 billion a month or something like that. It's crazy. It's stupid numbers. Many people will argue, well, they're not going to stop that anytime soon because of the sheer effect of it propping up the asset prices. They'll have to do it in a tapered manner and turn it off slowly. But do you think inflation could be potentially a trigger? Because that's one of the big consensus, that inflation could potentially mean that you're going to see the asset prices just drop as people were like, actually, we need more money to live on a day-to-day basis. All that money that I've stuck into, shares, I'm going to have some of that back. Thank you very much. Do you think there's a risk of that happening? Because you've seen the Fed in the US kind of backpedal on the whole. It's transitory. It's only... It's got, once supply chain and everything eases up and we get back to normal, it should return back to normal levels. They're backpedaling on that. Do you think inflation might be a catalyst that people should worry about?
I think there's been a long time without inflation, so when it comes back, everyone kind of panics. I think could have handled it better.
Yeah.
The transitory measure.
You still there? Yeah, there we go. I think, let's have a look. I'm just looking at the signals here. Are you still there? There we go. I think you're back. There we go. You went a little bit funny. You went a little bit jittery there. We got the bit where you talked about the Fed could have held it a little bit, could have handled it a little bit better. That's where we got to.
Yeah. But I think saying that it was transitory, if you already believed it was transitory, you just breathed a sigh of relief and got on with your day. If you didn't, it caused you even more anger. So it didn't really help anyone saying that. I think there is the case where inflation could stoke really jerk reactions in all central banks. And I think not inflation itself could be a trigger. I think it's the central bank actions afterwards, which could be a trigger. I think the bond markets are very good judges of this. And if they sense that there's uncertainty, or the Fed just can't, or if we get into a period of stagflation where we just can't fill the jobs market, and if we get into that and the bond market feels like, no, the Fed isn't up to the task, I think that's what triggers it. At the minute, I have to say, they could have handled this transitory messaging better. They're still human, and they said what they said, but I don't see this as cause for immediate concern. Inflation has been, it's been flagged in. It's been, the asset prices at the minute haven't really responded to. I mean, in the UK, we've just been told that UK inflation is probably going to sit around 4%.
Yeah.
That didn't cause a big change today. The market
No, it
didn't
hasn't.
completely
No.
panic. So
Yeah.
that tells me that it's kind of been priced in.
Yeah.
US as well. The US are dealing with higher figures. Everyone knows this is a really exceptional point in history. I think people are
Yeah.
willing to give it a little bit more before they panic.
Yeah, I that was one thing that I did notice in the budget this afternoon. The CPI numbers forecasted to be at 4% over the next 12 months. I was interested, and we're going to break this down on Sunday actually with Gary Stevens, the economist, around the unemployment numbers being a lot lower than what they predicted it was going to be, around about the 12%. It's now in the 5.2, I think, percent or so. And I think those numbers are really, really important for that longer term, because as you mentioned, stagflation, if you can't fill the job market, then all of a sudden you're going to run into a little bit of trouble. And the employment numbers being a little bit low actually help that messaging along a little bit more and stuff. So yeah, I think there are a couple of questions. Actually, I want to ask you some questions from the guys who actually are on Instagram. Sorry, if that's okay.
Yeah, sure.
There was one on there that from Steve. He said this question was way too long to put in the little box that I posted on stories. So his question was along the lines of, for creators, you can get like someone uses you signs up to use FreeTrade using the link. You each get a free share. I'm sure. Do you not have something for customers where if they refer a friend, they also got something free? Because he's asking if there is something available for just customers who use them, where you can win like £5 or £10 share. I'm sure you got something like that, right?
Yeah. So we have and I'll actually give you my code. So, but I'll tell you what the deal is. So if you sign up and fund your account with £1-2, you'll get a free share worth between £3 and £200, and then you can refer a friend who gets one as well, and then so do you. So it's kind of, you're both getting something out of that, and yeah, I think we've brought in that you can do it basically 10 times a month. I'd need to check it. It's on the site, but it's a good way to introduce people to the app and have a share sitting there for you. So if anyone wanted to do it, freetrade.io/Dan Lane, and yeah, pick up a free share on me.
Perfect.
It's not actually on
Excellent.
me. It's on the company, but you can see.
Yeah, there is another one on here. Do FreeTrade see themselves getting a desktop platform, or do they believe it's even necessary? I think sometimes different companies take different routes. What's your kind of like opinion on it? People are on their phone so much these days, so
yeah, I mean, listen, we launched on app simply because people told us that's what they'd use. But yeah, the desktop platform, we know that it is in the pipeline. It is. We have it on our roadmap. When I would need to look at the swim lanes and all the charts and everything, but it is on there. We know that it is important for some people to feel, my dad will never buy something on an app. He will need to sit down, have the web portal open. He'll need to have Chrome open. He'll need to sit there with a cup of coffee and actually look and type something with buttons that move.
Yeah.
So we know that there is a portion of people that need this, and it is on the roadmap. Yeah.
Cool. There was one question here. Are you going to add other markets like Germany, France, Japan as sort of where they can actually source individual stocks as well? You think that's in the roadmap, or?
Yeah, I mean, listen, this is all. I'm not releasing. This isn't like pre-RNS information. This is all out there. Yeah, I mean, our goal is when we say get everyone investing, we mean that. So we are making inroads into rolling out across Europe and further afield, and that means bringing the assets with it. It would be a bit unfair to roll out into European country and not let those people buy their own stocks. So yeah, absolutely, that is in the plans.
Perfect. Cool. Right. I'm going to get into some of the questions before we wrap up in the chat box here. So there is one here from Rosen. Let me see if I can get this up. It says, let me increase my screen a little bit so I can actually see it. It says, hi guys, I appreciate the fact that you're here to educate us on such sensitive topic. I want to ask why there is such a delay on the price info on the app. Sometimes we don't get fresh price for the minutes.
Yeah, so there's something we're rolling out, and we have actually rolled out live pricing. So I would say if you're having specific problems, feel free to contact, hello@freetrade.io, But one of the big things that we've been quite pleased with is the rollout of live pricing. If it's not working for you, definitely get in touch. But you should see on the app, on any asset that you go to, a little pulsing, a little pulsing dot on the asset that shows you that the price should be accurate to like the last 3 seconds, I think.
Fantastic. I'm just having a look at this one. Let me just have a. Okay, that's kind of a conversation rather than a question itself. If you do have questions, guys, this is where you can put them in here into the chat before we wrap up. Kevin's avalanche of investors there. Love Guinness. That's another comment and stuff like that. There's a conversation going on. Some people are saying actually that they really like FreeTrade and they use FreeTrade. There's a question here. Are we going to see more analysis tools on FreeTrade?
Yeah, it's something that we really want to do, and we want to make it a priority. We know that, I'll tell you what, I mean, we know that people trade in different ways and invest in different ways, using different tools. What we want to have is a one-stop shop where you don't feel like you have to go to a Bloomberg terminal or a Stockopedia or something, where you have to get those fundamentals. What we're doing at the minute is seeing that specifically what people are using, what people want. It's different. It's funny when you interview people, they say that they want all these things and they never use them. And that's what we actually want, is to say, okay, well, you don't have to give me a textbook answer. There's no right answer here. Just tell me what you want. Do people use PE ratios? Do people use price to sales? What do people really want there? How high up do you want the dividend yield? Is that even important to you? All these different measures. And how do you want to present it visually? Something that we're really proud of at FreeTrade is the attention to detail in the design. And the design and the user interface and the user experience is super important. So this is something we're taking very seriously, and the fact that it is taking so much time, I can tell you it's going to look fantastic. I've just put a little bit more pressure on our designers there. But yeah, we know it's important and we know people want it.
Great. There is a question here from Branston. When viewing a stock, why is the max on the chart not the actual price, the actual max, as it doesn't show their IPO price? I think if you go back to the chart, you go back to the beginning, surely you'd be able to analyze it going back to the beginning of the launch of the fund, right? But I don't know.
Yeah, I mean, it's a young app, and one thing that we've taken guidance on is that, the FCA financial promotions rules show us that we should be presenting at least 5 years worth of data. So that's what we rolled with to get these assets up and running. It doesn't mean that this is the only way we're always going to do it. But it is the one that the regulator likes, and it's they would like you stretching back to the 20s and 30s for the US market, but it's the one that we've been able to express, especially on an app screen where it's so small. It might be something they can explore more within the web portal, but don't hold me on that, or else I'll be asked to design it myself. But yeah, listen, it's something we're looking into. It goes back to the fundamentals. Do people want to see full asset performance, or do they want to see price to earnings related to the last 5 years? Because that tends to be, especially if you're doing things like the PEG ratio, you might factor that in, trailing 12-month yields and things. So it's something that we've taken a decision on, but it's an iterative process, and we'll get there.
Cool. There is a question here on will FreeTrade be offering options trading in the future? Would you go down that route?
No, we just wouldn't. It's not. Listen, there are other platforms that do it, but we're running our own race. We don't feel like it's an appropriate thing to be exposing to. What we've just seen in the retail survey is a whole swathe of first-time investors. We've made it clear on that, in that sense, where we like kind of long only, simple investing that people can take control of and aren't going to be hit with outsized influence in other areas of the market. And we just think it's about investor safety as well.
Yeah. I mean, I will say that, if you're looking at, you start going down the route of options trading, that's a completely different skill set, like completely different skill set. It's not the same fundamental analysis. You're then getting into technical analysis. The level of attention to detail that you need at that point is way beyond. And if you can't grasp the simple investment fundamentals, grasping that is a completely different league zone. So
Yeah, I
yeah,
mean, Peter Lynch is my favorite investor of all time, and he said that options scared the life out of him. So if they scared him, they'll scare me.
yeah. There is a question here from Kev. Will FreeTrade offer some stock educational videos in the future? You do have the educational part on the website, don't you?
Yeah,
Where
yeah. Do you know
there's some stuff there.
we have the educational sites. We have a Learn Hub, and that's kind of the big bookmarkable um, pages you can come back to again and again and again. We've got the news page, which is a little bit more up to date and a little bit more fleeting. Um, in terms of videos, yeah, we're thinking about the best way to do this. Actually, a lot of people say they love videos, but then don't engage with them in a certain way. Um, the same goes for podcast, the same goes for written, the same goes for long form, short form. And again, it just comes back to we're just saying which way our community really wants to engage with this. We have a
Hmm.
really active community forum, and we put stuff out there. They say, actually, this is really good because this serves this purpose. And if we find the video does that, yeah, we'll do it. We'll do it.
Yeah. There is a question here on fees. It says, why FreeTrade is not comparing their fees to Trading 212 or Vanguard, but only AJ Bell, Interactive Investor, Hargreaves Lansdowne on the website. So, how do you pick those? Because I think, do you? I don't know. What's your philosophy around that? Because some will say that maybe the closest. Because I don't think that you're a Vanguard. I'm not, because Vanguard you can't buy individual stocks, so I don't think that's a fair comparison, really, to be honest. But then, how do you go about selecting who you compare your fees to?
Yeah, well, I mean, in the background, we obviously have a much bigger spreadsheet with comparisons there. What we present is against some of the biggest players in the market, the people who have propositions who are probably closest to ours in terms of the product offering, the ETFs, the shares, the trusts. Um, they might have open-ended funds. We're obviously just doing exchange-traded instruments, but there is a line between where we see that comparison being useful for investors and some of the platforms that offer products that we would never even think of offering. That feels less relevant to us. They might have different purposes. They might have different fee structures where they bring you in on one only to monetize you in a different way.
Hmm.
Um, that is just not who we are. So it makes less sense for us to do that. But what we tend to find is the um, people who we talk to will tell us, "Oh, you're like a Hargreaves," sometimes, and then we'll
Yeah.
kind of say, and that tends to be. I mean, listen, it's no secret that the biggest asset house in the UK. Um, but what we then say is, okay, well, if they are the biggest, that means that there's a lot of people maybe looking for an alternative. So we're
Hmm.
going to show them their fees against what we can offer. And
Yeah.
it's no surprise. AJ, II, HL are up there. You said
Yeah.
the other ones just aren't appropriate because, Vanguard, you can't buy stock. So
Hmm.
it doesn't feel it feels less
Yeah.
relevant.
Cool, great, thank you. There is this one as well. Will FreeTrade offer a pie feature similar to that of Trading 212? It's really, really cool in Trading 212 around the pie, just because I think you're able to do your monthly contributions and it just allocates it to the pie as you build it. Is that something that maybe you've got something similar coming down the track, or a feature that you might have that does something similar at this point in time?
Yeah, it's certainly something that we hear quite a lot, and our engineers are just at next level. They're just unbelievable, and it's something that they know that um, people are looking for. Uh, we're growing massively as a firm right now. I mean, when I joined, we had 80 people. This time last year, and we've got just over 200 now.
Wow.
And with that comes the opportunity to explore these things. So if you were to say to an incumbent who'd been around for 40 years, why haven't you done this already? I completely understand that. What you're saying now is that a company's been around for, 3 or 4 years. What I can definitely say is that these conversations are going on. Um, but it's about time and resource. And if we
Mm,
can get more resource and do more user testing, make sure it's something that people want. Yeah, I mean, the sky's the limit, really. I'm in awe of these engineers, so they could probably do anything.
yeah. I'm going to grab maybe two or three more. because I'm conscious of time as well. So I'm going to choose. There's a couple of really good ones back to back here. So there's this one from Grand Sing Music. Will FreeTrade ever consider looking to include the Vanguard lifestyle strategy funds? I don't know whether they'll be available because they're the Vanguard ones with the equity and the bond allocation. Automatically, you can go from 20 all the way up to 100. Would you consider having those on?
Well, I don't see this. We get this quite a lot from different areas in terms of, are you going to add open-ended funds? Are you going to add Terry Smith on? We get all these types of questions. Sometimes it's just because people haven't asked us, and we'll have a look at it. That tends to be about assets that maybe have low liquidity, and people will have to assess whether they're liquid enough to put in the platform. Other strategies we'll need to assess and say, well, actually, could you do it in an easier way yourself? And is it more about us educating you in a way that you could do it cheaper, easier, in a way that you can manage? And actually, is the theory of the 60-40 split even relevant anymore? Or is that something that you've gone into because an advisor friend has told you is sweet, just stick your money in that and talk to me again in 40 years? Or is there a chance for us to say, actually, let's explore this. What do you actually want? And can we guide you in a different way? Especially with bonds maybe coming onto the picture again, these strategy funds will, there'll be a lot of demand for them, but with the prices of them, people forget that not all of these strategies are as cheap as 5 basis points. Is there a way we can guide you to do that cheaper? I mean, in short, I don't know whether we would add them, but if they're, are they exchange traded? Are they ETFs or are they likes?
The way they're built, they have a load of like Vanguard index funds and ETFs inside them inside the structure of them.
Yeah.
So I would say they're probably more packaged as kind of like an index fund that has a load of index funds and ETFs inside the structure.
Yeah, I mean, we don't have, or we just don't offer non-exchange exchange traded assets. But I mean, there's very clear need for people to be able to construct these themselves through ETFs. So yeah, there's lots of work to be done on that.
Yeah. The next question is about a LISA. So any plans to introduce a LISA or similar to the Vanguard? So we've already covered the Vanguard Life Strategy Fund, but a LISA, obviously people looking to invest for house deposits or pension retirement, that kind of stuff. Is that something that you would that you're thinking of adding? Is it in the pipe maybe?
Yeah, do you know, it's something about resource time and what our priorities are. The uptake of LISAs have been really mixed across the industry. Genuinely, I remember them coming out on platforms saying, we're going nowhere near this. Some of them saying, yeah, we'll give it a go. And some of them saying, well, we've got enough money, we'll just launch it. I can remember no one being tremendously excited about it, because there was, if you remember at that time, there was the Help to Buy ISA, there was the LISA, there was the I can't believe it's not an ISA, there was all these other.
Yeah.
So we know that the building blocks that we need to be providing are ISA, SIP, and GIA. That's where we are. Once we get, once people are happy with that, and we have our asset universe complete to the place we want it, there's obviously things we can explore. But I'll need to speak to my product guys first before I answer that.
Cheers. And this one is about, I think, a feature. Is there progress being made on the autopilot feature?
Yeah, so these are things, for anyone who doesn't know, we tend to put out things about what we're working on in the community. And we'll have regular meetups with community on videos, on live sessions, a bit like this actually, in which we talk about what's in the pipeline. And I'm starting to sound a bit like Groundhog Day about things being in the pipeline, but the point is that people following us will know that we've been through a few funding rounds to give us the money to go out and get these world-class engineers and world-class performers to really build out the offerings. So yeah, we know autopilot. We know people like to have it, and these kind of monthly savings plans and things. And I'm a big fan of that pound cost averaging and that steady approach to investing. So yeah, we know what's on your mind. We know it's there. Don't worry, not the first time we've heard it.
I was going to ask you, this is the last question, and I was going to ask you this, but then I forgot, and someone just put it in the chat.
Oh,
so I'm going to ask because, I think it's a good question. Would you offer ARK investments? Now I know that there's the whole MiFID thing going on with actually having it available. But I don't know, would you be able to get around the MiFID fee and have the ARC ETFs available on FreeTrade potentially?
Well, do you know, I mean, the answer's kind of got to be no, because it's not, and people tend to paint this in a weird light. It's less about us saying no. It's more about the US ETFs just don't want to play ball a lot of the times. They don't provide their key investment documents, the KIDs. So they just don't qualify under UCITS rules. It's kind of it. But specifically on Cathie Wood, we did a piece. I wrote a piece. It's a while ago now. Like, do you want to even invest like Cathie Wood? People will tell me that I'm never buying Scottish mortgage because it's 0.35%, and that's outrageous when I get Vanguard for 0.05%. Cathie Wood's charging 0.75%.
Which comes back to the cost again. Exactly. Yeah.
And what are you buying? Are you buying an ETF? Is it really an ETF? Because an ETF to me in old money is an S&P 500 that I can then put my current satellite around. These active strategy ETFs start to look a bit like active open-ended funds. The more that you look at them, and this was the argument maybe 6-7 years ago, it's about what's held in these ARC funds as well, and what appears time and time again across 3 or 4 of them. Listen, Cathie Wood's done tremendously well about this futuristic version of what you can achieve by buying into the future of progress. But I also said in that article, if you wanted to recreate the ARC technology fund, ARKK, on FreeTrade, you just could buy the assets. And
and she actually publishes the entire holdings on Cathie's ARC, so you can literally see all of that and just go and buy and recreate it at less and not 0.75% management fee as well.
Yeah, exactly. But we get that a lot, and that's fair enough. And it gets a bit annoying when all you can say is, well, they just don't follow the rules, so we can't offer it. But it genuinely is the case.
Yeah. Cool. Guys, I appreciate, mate. Really, really good for you to spend this time with me. I hope you found value in it. I hope you enjoyed it as well.
Absolutely.
And I hope that everyone who's watched this and watches this on repeat also found some value in this as well. Thank you to you, Dan. As I said, at the top of the comments, I've actually pinned for you to join their newsletter. It's free, isn't it, Dan?
Oh, absolutely. It's completely free.
So go and join it. You'll be able to get some articles and some information that will help you on your journey. So use that link right there. And look, as always, this is a Wednesday evening. It's now 9:45. Everyone that is here is always here and supporting and taking part in the chat. There is lots and lots and lots of stuff going on in the chat. Lots of conversations going on as usual. Really do appreciate you. Whatever it is that you're doing for the rest of the week, please make sure that you have a great one, whatever it is that you do. Remember, money's a tool, life is for living. I'm going to catch you again on the video on Friday, and then with Gary Stevens on Sunday to talk about the budget. I've also posted in the community section on November 10th. I also have a live show with Andy Webb. He writes a column for Metro Bank every single Monday. He's really, really good in terms of helping people's money go a little bit further. So we're going to be talking about what you can actually do to be prepared for the new year, so on and so forth. That's November 10th. I'll be posting about that in the community shortly. But the next one is with Gary Stevens. And oh my God, amazing. Some of the work that he's doing, I've got to have a chat with him on Sunday, but some of the work that he's done, he's actually signed a petition with a number of his fellow millionaires saying, please tax us more money. There's 30 of them that have signed this letter, and they've put very, very interesting stipulations that if you tax us, we also want you to apply tax to certain other people as well. It's caught the imagination of the radio and stuff like that. I was listening to earlier today. Really, really good. So I'm going to talk to him about that, and we're going to be talking about the budget. But guys, have an amazing week, whatever it is you're doing. And again, thank you, Dan, for coming on to the show.
Excellent, Pete. Thanks very much.
Cheers, guys.